Today, we are going to discuss how to create account schedules or financial statements in the system. Let's go right out to the account schedule table so we can take a look at how this works. If we go to Financial Management and we choose General Ledger and then select Analysis and Reporting, we have the ability to choose account schedules. What this does, it opens up our account schedule window for us, allowing us to thus make changes. Now, before I go ahead and show you how to make the changes to this, let's just print this particular profit and loss statement so you can see how it looks on the output end. I'm going to put a date filter in here of 11/01/04 through 11/30/04. And this is our profit and loss statement. Let's just choose preview so you can see it on screen. Now it shows for us the current month, the percent of the total current month, year to date, and percent of total year to date columns. Okay, so it shows for this particular period. So it's showing us our current month plus year to date. It shows first our revenue, okay, and then direct cost, and so forth down the line. Giving us our gross margin, cost and expenses, income from operations, thus giving us our net income at the bottom. Now, where these numbers came from is very important to talk about. Let's take a look at this. Let's close out of this window, and here is the actual code per se behind the scenes that actually drives where the numbers come from in the system. Let's take a look at each one of these fields and describe how this works. First off, you need to define a row number for your account schedule. And I'm just using this profit and loss as an example. We're going to use this one and then one additional one we'll look at so you can see some of the differences between the two. So we define a row number first. Okay, now these row numbers are used in the account schedule for things such as formulas, which we'll talk about in just a second. Now the first row number here, we didn't put a description in because it's just a blank row number and we're setting what's called a set base for percentage. So the description field is what actually shows up on the report. You'll recall that we saw it showed revenue and then it showed rental, sales, service, and other, total revenue, direct cost, etc. So for the first line, we don't have any description. Our totaling type is set base for percent. Let's take a look at the different options that we have here. We have posting accounts, total accounts, formula. You can set it to be an underline, a double underline, or you can choose set base for percent. Now if you recall in the columns that we looked at, we had the current month and then the percent of the total current month and the year to date and percent of total year to date. Where it comes up with those percentages, we need to set a base for that percentage. So we said that our base for the percentage is row number 060, which is total revenue. Okay, so that's why we choose base for percentage at the top of that. So all the base for percentage is going to be built off of our total revenue dollars that get pulled in here. Now, moving across, our next, and we'll look at each one of the different totaling types in a minute. The calculate column. What do we want to calculate? Do we want to calculate the net change? Do we want to calculate the beginning balance, the ending balance? And those are typically, ending balance will be used for, let's say, a balance sheet. And then, or do we want to put debits or credits only? In our particular case, we want to see the net change for that time period. The next four columns that you see across the right here are our dimension columns that allow you to filter by specific dimensions. Now, if you look at the column headings, it shows department code totaling, project code totaling, and then dimension 3 totaling and dimension 4 totaling. Department code and project code in this sample database that we're looking at, a sample company, are the two global dimensions. Now be sure to review the video on dimensions to understand how they work, but the global dimensions you define, those are the two dimensions that you most commonly use, and they show up on all headers of documents and so forth. So department and project by default will always show. Now dimension 3 and 4 totaling, these are blank. If we actually click into lookup, there's nothing to choose from in this list because we only have department and project assigned to this. The reason why you only see department, project, and then dimension 3 and 4 is because we don't have what's called an analysis view assigned to this account schedule. We're going to come back to this concept in just a couple of minutes, so let's just take a break from that for a second. Now, if I scroll across a little farther, we have this column. It's called Show. Now we have yes, no, and if any column not zero. What they mean is, do I want to show this particular line, is what it's basically saying. And I say yes or no. The third choice is if any column not zero. If you choose if any column not zero, what that means is that it will show that line so long as one of the columns has a value in it. So in this case, we've got 4 columns, and 2 of them are driven off of the other 2. So we'll just talk about the first 2 columns. First, we've got current month, and then we've got year to date. Now, if there was no value in current month for a particular line, however, there was a value in year to date, and we had this set to if any column not 0, it would show it. However, if there was no value in either the current month or year to date, it would actually hide that particular line. Do we want to bold this line or not? Okay, you could check a box here for that. You'll notice this next line here is bolded. Do we want to italicize it by checking the box there? Do we want to underline the actual value that comes in? We could check that box there. And then the final 2 are show opposite sign and new page. Now, show opposite sign, basically what's happening in this account schedule, if we look at this revenue line here, okay, we've got the total, we're bringing in rental revenue. Okay, from a particular GL account, 40999. We'll talk about that in a second. Revenue, by default, as designed, is a credit account, so it posts to your GL as a credit amount. Because of that, if I left this checkbox here, show opposite sign, as unchecked, it would actually bring the value into the report as a negative value. Now, typically when you're looking at a report, you don't want to see your revenue as a negative amount, especially if it's positive. So in this case, we're checking to show the opposite sign because we want to take the raw sign and make it look as if how we want it to look on the particular report. Finally, when you're creating these reports or these account schedules, when you get to the when you're testing them out and you're printing them and so forth, you may get to a certain point where you have a section that you've got defined on there, and part of the section is on one page and part is on the other, but you wanted to keep it all together. Well, you can force the system to move to the next page by simply placing a check in this check mark field, and that would then say, okay, the next line after that is going to end up being starting on a new page. So that's simply the function of that new page feature there. Okay, so let's take a look at some of the values of as how we've brought in particular entries in here. The next row that we've got here is row 010, and we've defined it as revenue. Okay, if we scroll across the second one, we've said we want it to be bolded. Okay, so it's going to show bolded when we actually do the printed output. The totaling type automatically defaults to posting accounts. If you have nothing set in the totaling account field here, then that means that it will not actually calculate any values. So that's fine to leave that as is. And it also defaults in to be net change. So this is just simply a description field. But this next line, the rental one, is saying, okay, row number 020, we've got rental is going to be our revenue for this particular case. And what we said is we want to go out to the GL, okay, to our chart of accounts, and we want to grab a total account. Remember, we have got posting accounts and totaling accounts. In our general ledger, a totaling account simply totals up a group of posting accounts. A posting account, on the other hand, is an account that you actually post values to. So when we look at this, we've got our total account set to 40,999. If I click on my lookup arrow, it brings me out to my GL account list, and it shows me here total rental revenue, which is an end total account. There are 3 other posting accounts directly above it that actually make up the value of this total revenue account. So for our rental revenue in our income statement, we want to show the total of rental revenue, meter revenue, and sale of used rental equipment all in one field. Okay, so that one row is going to show total rental revenue. So by choosing total accounts, we're able to pull in all of the totals for that, or all of the values from those 3 accounts into the one account, and then show that as a lump sum on this particular report. If we move down a little further to the sales line, row number 030, it shows total accounts, and then it shows 2 different accounts, 44,999, and then it has a pipe, an up and down, or just a straight up and down line, and 48,999. What that simply means is it's saying, give me the combination of these 2 total accounts, bring me the raw value in of the 2, the absolute value. So if one was negative and one was positive, it would take the actual difference of the 2, in which whatever was higher, let's say the positive was higher, it would show a positive amount there. So a pipe just says, give me the raw value of the 2 combined. Now if I click on my lookup arrow and I go to GL account 44,999, you'll see that it is total sales revenue, which includes sales revenue and sale of new equipment or assets. We also said in here that we want to take the combination of 44,999 and 48,999. 48,999 is our net jobs revenue. So it's going to take all our job sales and sales of other job expenses and combine those two together. So it's going to take the total of net jobs revenue and total sales revenue and combine them into one value for this sales line. So as you can see, you can start to build the totaling and so forth to grab certain accounts from the GL. Okay, scrolling down a little, I'm going to skip over service and other. You get the idea as far as how totaling accounts work. Then we chose on this line, we have a blank row, and that's fine. We just chose the totaling type as underline. So basically at the end of other, it's going to put an underline in there. And we'll take a look at that when we print it again. Total revenue account, here we've defined for the combination of all of these values that come in, we're now specified to use a formula. A formula applies to the account schedule or financial statement you're creating, and it's built off of the rows. So we said, give me everything from row 020 to 050. So it's from rental 020 through 050. So it's going to give us the total for all of these 4 different lines to give us our total revenue. Okay, the next thing we did was skip a line. Okay, if you skip a row number, you can skip a line. If you leave it at posting account, I'll just leave a space in between there. And then we go down to our direct cost. So we have rental, sales, service, and other, and now we're pointing to totaling accounts that are defined as the cost for that. So 52,990 is our total cost of rentals, which includes our rental equipment depreciation cost, rental equipment maintenance cost, etc. So that's where we grab the value when we pull this in for the total cost of rentals. And then, of course, for sales, we grabbed it for both sales and jobs. And then service, we grabbed from a service cost account. Okay, scrolling farther down, we did our total direct cost of 080 to 110. So it's going to take the values from here all the way down through other. Then we specify a gross margin. Now, for our gross margin, we've set it to be a formula for each one of the lines. We said for rental, we want the formula to be the absolute value or combination of row 020 and 080. So 020, if we scroll up a little, it once again is our rental revenue, that total account, and 080 is our rental direct cost, 52,990. So if our total costs were more than our revenue, it would actually show up in here as being a negative gross margin at that point. So we're basically saying, give me the absolute value of the two to give me my gross margin. Scrolling a little farther down, we've done some more formulas. We did it from 140 to 170 for our total gross margin, so it's row 140 through 170, and then down on the line here we've got cost and expenses. We pointed to specific totaling accounts for selling costs, general and admin costs, and as we get closer down to the bottom here, we've grabbed formulas from various different rows in this, and then for our net income, we just grabbed the total formula of 290 and 300. So we said, give me the net value or the absolute value of row 290, which is our income before taxes, which is built off of other formulas, and our provision for income tax, which is our total account 80995. And then finally we put a double underline. So once again, to reprint this report, if we take a look at this, and we'll just use the same date filter, we'll choose preview. So we've got our underlines, we've brought in all our values, it shows our total revenue, total direct cost, and then the gross margin calculations came up. So you'll notice here for service, for instance, we had very high service costs and very little service revenue, so it actually showed up as negative $78,000. Total gross margin it gives us, etc. down the line, thus giving us our net income with the double underline at the bottom. Now, the next thing I wanted to show you in these account schedules is a different account schedule, which we refer to as our rental revenue analysis. Now, take a look before we switch at the department code, project code, dimension 3, and dimension 4. That's the headings of these various different column headers here. I mentioned before we'd be getting back to this, and we are in this case because in our rental revenue analysis, we have applied what's called an analysis view to that. If we click on the lookup in the analysis view field here, it brings us out to our analysis view list, and we've applied CPDP, which stands for Customer, Product, Department, and Project. By specifying an analysis view, you can resort the dimensions as to how they appear. So we said we want customer type to be first, product type to be next, then department, then project. So closing out of here and choosing the rental revenue analysis report, you'll notice now that the column headers have changed. We said that we want customer type first, then product, then department, and finally project code. So we'll come back to how those are utilized in just a second. So just to review over this one, once again we have a set base for percentage. We're using the same column layout, current month with percentages plus total or year to date with percentages. So we said our set base for percentage is row number 100, which is our total rental revenue by customer type in this case. And now what we've done is we're doing our rental revenue analysis by two different types. We do it first by our customer type and then by our product type. Now let's take a look at how this report is designed, because this is a very important feature of this that you need to know how to use. We've got row number 010, right? We've defined our customer type as commercial. This happens to be a dimension that we've defined in this particular system where we're keeping track of our customers by a customer type: commercial, construction, government, and other. That happens to be 4 categories. Now what we did is we specified to look to a posting account. That particular posting account is GL account 4100, which is our rental revenue account. So if we take a look at 4100, it is rental revenue. So it is a posting account and not a totaling account. So that's how you can utilize the posting account versus total account. Now you'll notice for customer type of commercial, construction, government, and other, all of them are pointing to the same rental revenue account. However, what distinguishes them on the report is this customer type code totaling. What we've done is, since we reorganized how we want our dimensions to show up in here, we have the ability now to drill into here and pick the different types of customers that we've got. So we said for this line, I want you to look at, or I want the system to look at rental revenue, GL account 4100, and only give me the values that have this commercial customer type code that have been applied to them, or that have been posted to them. And for the second line, we said we only want those with construct, which is our construction customers. Third line is government, and then the fourth line is other. So that's how it then brings in different values for each one of those. And then what we did is we did our total rental revenue by customer type line to be a formula whereby we add up 010 through 060. Scrolling a little farther across, you'll notice that for these 4 lines, we chose if any column not 0. So that's that whole feature where if one of the columns does not show up, if we hadn't sold to anybody or rented anything to somebody during the current period or year to date, it would actually hide that particular row. Okay, scrolling a little farther down, now we put a double underline under this formula, so we show that total rental revenue by customer type. We skipped a couple of lines, and then we moved down to by product type. Now we've defined our different product types in the system. We said rental air equipment, compaction equipment, concrete, lifting, and so forth down the line. You'll notice that the posting accounts are all the same, 4100, except now what we're doing is we're applying a product type code dimension to each one of the lines. So for this particular line, I said I want you to look at GL account 4100, my rental revenue, and tell me all of those that rental revenue from that rental revenue account. Give me only the values that actually have RNT-099, which happens to be our total rental air equipment dimension. So if any of these dimensions were posted to it, they would be in this total rental air equipment, and it's going to go through, look at all of those, look at all of these different dimensions, rent 010, 020, and 030, combine them all together and pull them into this one line for rental air equipment. For rental compaction equipment, we said we want to look at RNT-199, which is the combination of handheld compactors, static compactors, and vibratory compactors. So it's bringing in rental compaction as our value to look at, so it's going to grab only the values for that. So as you can see down the line, you can filter the same account and put different values in, so you can look at your analysis by the different types. We've got customer type and then product type. Now, if you've set your dimension controls proper on GL account 4100, and we'll go take a look at that just for a second here. On our account, we said that we want the dimensions for this particular account. We said that we need to always post a customer type, a department, and a product type to this particular account by putting a value posting of code mandatory. We've said in our dimension value code field here, we're not defining a value code, but we just want to make sure that these dimensions are being brought into that rental revenue account so that when we do our analysis later, everything should true up accordingly. So here, since we define that we need a product type and a customer type whenever we're posting to rental revenue, that means that the total of our product type here, which is 150 to row 150 through 222, should always equal our total of our customer type, which is formula 010 through 060. If we scroll a little farther down, we then have a section for sales of used rental equipment. Now we're pointing to a different account, GL account 4900, which is our sale of used rental equipment. And on this account, we did the same thing with the dimensions. We said we want customer, department, and product to be mandatory whenever you're posting to that account, and thus that gives us a product code totaling that we can filter by. So now we've got GL account 4900, and we have applied those same product type code filtering to each one of those lines. So let's take a look at this report so you can see how it all looks. When we choose print, and we'll keep the same 11.104 to 11.30.04, and we'll preview this on screen. And now you'll notice that for our customer type, commercial, construction, government, and other, during that month, it gives us the values for each one of those, and then for year to date as well. Total 650, 848. If we scroll down here for by product type, it breaks it down by each one of the different product types, right? With the total being 650, 848. So they should always be the same in this case. If they're not the same, then there must be a problem either with a dimension or something that you've set up wrong in there. So you can utilize your account schedules to really create any different amount of financial statements as you wish. If you notice, if you look in the database, your database, we've set a bunch of default ones. These are all the default ones that come with the system. Summarized balance sheet support schedule, rental rate multiplier, all the way down the line here. But you can certainly go in and create any account schedule that you wish and define it how you wish based on all of the different variables that you have in this account schedule window. It allows you to create these however you see fit. Now, one last thing is that you don't always have to print it from this account schedule window. You don't necessarily want to give everybody access to this account schedule window to edit this. If I close out of this for a second and come out here to our reports, there is a section under General Ledger Reports called Financial Statement. And here you can click on Account Schedule, and it just brings up that printing account schedule window. And now you can come in here and choose the account schedule name that you want to print. We'll leave it on Rental Revenue Analysis, and then preview it from here. So that way people don't necessarily have to go out and get bogged down with the details of what's actually behind the report if they just want to go ahead and print this particular report. This concludes the video on creating account schedules.